Now there are some important information. As yesterday we have also discussed some information. Today this is also a very useful information about the GST. This says GST is not levied or charged in the following cases. When GST is not charged, first, amount introduced into the business by proprietor as a capital, or he has withdrawn any amount from the business for personal use. In these two cases, no GST will be charged. Third point is amount deposited or withdrawn from the bank. If you are depositing and withdrawing from the bank, no GST will be charged. Amount paid to the creditor and discount received from him, no GST will be charged. Amount received from debtor and discount allowed to him, no GST will be charged. Bad debts written off as well as bad debt recovered, no GST will be charged. Payment of wages and salary, no GST will be charged. Payment of electricity and water bills, no GST. And the last one, payment of traveling expenses, no GST will be charged. So keep these points in your mind. It will be applicable while you are recording the transaction. Now I'm taking the next illustration to explain you. This is again this is again a question. We are assuming that all the transaction take place within the state, that is intra-state transaction. And for intra-state, I have discussed that is CGST and SGST will be charged. So I'm taking the first transaction. uh, the question says pass entries in the books of Mukul Roy and Sons, assuming all transactions have been entered within the state of West Bengal, charging CGST and SGST at 6% each. Now, year 2018, April 1st, the first transaction, purchased goods for rupees 1,50,000 from S. Banerjee. So no cash is mentioned, it's a credit transaction. So very simple, we have just now done in the first question. Purchase is involved, S Banerjee is involved, input CGST and SGST is involved. Purchase is an expense, it is increasing in the business, so it should be debited. S Banerjee is a supplier, he is a creditor for the business because we haven't made payment to him, so it's a liability for the business. Increase in liability should be credited. Input CGST and SGST, they are asset and they are increasing in the business, so it should be debited. And the journal entry will be this one. First you write down the date. In the date column you will write down the April 1. Year you will mention year 2018. In particular column you will debit the purchase account with 1,50,000. Input CGST, 6% of the 1,50,000 is 9,000, and input SGST, 6% of the 1,50,000 is again 9,000. Total amount we will pay in future to S Banerjee as a creditor for the business. We are having a liability to make payment in the future is total 1,68,000. That is 1,50,000 plus 18,000. So the narration will be being goods purchased on credit, or we can write purchase goods on credit. Now next transaction I'm taking is again April 6. April 6. April 6, sold goods for rupees 2,50,000 to Aditya Sangama. So again, this sale is a credit sale because cash is not mentioned in this transaction. So three accounts are involved. Sales account is involved, Aditya Sangam is involved, and output GST is involved. So sales is an income for the business and it is increasing in the business, so it should be credited. Aditya Sangam, whom we have sold the goods, he is a customer, he is a debtor because he is not making payment right now, he will pay in the future, so he is an asset for us, so increase in asset should be debited. Output CGST and SGST we have discussed, it's a liability for the business. It is increasing in the business. Increase in liability should be credited. So the overall journal entry will be this one. First you write down date, say April 6. Aditya Sangam will be debited with the amount of sales, that is 2,50,000, and 6% CGST 15,000, 6% SGST 15,000. This 6% is calculated on the amount of 2,50,000. 6% of the 2,50,000 is a 15,000. So total amount what Aditya Sangam is liable to make payment in future is 2,80,000. So Aditya Sangam will be debited with 2,80,000 to sales, as our income is 2,50,000, and output CGST and SGST 15,000 each as a liability for the business. So sale of goods on credit, this is a narration, or you can write being goods sold on credit. Now next is April 8, return goods to S. Banerjee for rupees 10,000. So this is a purchase return. We have purchased goods from S. Banerjee, and due to some reason we are returning goods of rupees 10,000. So S. Banerjee is involved, purchase return is involved, and definitely at the time of purchase, whatever the input GST we have paid, it will be cancelled out. So input CGST and SGST is involved. So as Banerjee, we have seen in this transaction, it's a liability for the business. He's a liability for the business because it is creditor. Now we are returning some goods to him. So our liability is decreasing. Decrease in liability should be debited. Purchase is an expense. So purchase return is decrease in expense. So it should be credited. Input CGST and input SGST, they are an asset while we have paid at the time of purchase. Right now this asset is decreasing. Decrease in asset should be credited. So journal entry will be, first you will write the date, then S. Banerjee will be debited with the liabilities decreased by the amount of purchase return, that is 10,000, and 6% each CGST and SGST, 6% of the 10,000, that is 600 and 600. So total amount we will debit to S. Banerjee is 11,200. Our liabilities decreased by 11,200, which we will not pay in the future. Now next transaction I'm taking is on April 15. Aditya Sangama returned goods for rupees 8,000. Again, we have sold goods to Aditya Sangam. He was a debtor for us because he hasn't paid that time. Now he is returning some goods due to some reason. So goods returned by the customer is treated as sales return. So I'm giving you explanation here. Now Aditya Sangam is involved in the transaction, sales return account is involved. Apart from this, at the time of sale, to Aditya Sangam, output CGST was involved. That was liability for us. Right now we are that liability will decreasing. So this accounts are also involved. So Aditya Sangam was a debtor for us. Now it is decreasing, and debtors are asset for the business. Right now it is decreasing because he is returning goods. So asset is decreasing, and in asset is credited. Sales return, that is sales was income, so sales return is decrease in income should be debited. Output CGST and output SGST, they were liability. Now because goods are returned by the Aditya Sangam, so liability is decrease in liability should be debited. So the journal entry will be passed like this. Sales return account will be debited with 8,000, 6% CGST of 8,480 and SGST where 480 will be debited, and Aditya Sangam will be credited with 8,960. 8,960 is 8,000 plus 480 plus 480. So being goods returned by the Aditya Sangam or being sales return. Now next transaction is on April 18. Printing and stationery expenses of 5,000 paid in cash. So again we are making payment of expenses, printing and stationery expenses, and definitely input CGST will be involved. Now printing and stationery account will is involved, cash in is involved because we are making payment, and the same time we are making payment of expenses. GST will be involved, so input CGST and SGST will be involved. Printing and stationery is the expenses increase in, and they are increasing in the business, so it should be debited, and increase in expenses should be debited. So cash account is a, because we are making payment, so cash is an asset and it is decreasing in the business, so it should be credited. Input CGST and input SGST, they are asset for the business, they are increasing in the business, so it should be debited. And the journal entry will be printing and stationery account debited with 5,000, 6% of the 5,000, that is 300. CGST will be debited with 300 and SGST will be debited with 300. And to cash, total payment we will make, that is we paid is 5,600 for being printing and stationery paid. Now next transaction is goods withdrawn by the proprietor for personal use, that is 20,000. So goods withdrawn by the proprietor for personal use, it's a drawing. So drawings are involved. Drawing is involved. He's withdrawing goods, that is purchase account is involved. So input CGST and SGST will be cancelled out by crediting it. So drawing account, it's representing the capital. Drawing account, it's representing the capital. Drawing is nothing but the decrease in capital. Decrease in capital should be debited. Purchase, when you have purchased goods, it's an expense increasing right now because goods are withdrawn by the proprietor, so decrease in expenses should be credited. Input CGST and SGST that we have paid at the time of purchase, that will be cancelled. Earlier they were treated an asset, so decrease in asset should be credited. So journal entry will be drawings account debited with 22,400 to purchase 20,000, 6% of the 20,000, that is 1,200. CGST is 1,200 and SGST is 1,200, which is to be credited. Total drawings value of drawing is 22,400, which is the sum total of 20,000 plus 2,400. Goods withdrawn by the for personal use, or being goods withdrawn by the proprietor for personal use. Now next one is goods destroyed by fire. Goods destroyed by fire, again loss is there. It is not written here. So loss by fire account is involved, purchase account is involved, and input CGST and SGST is involved. Loss by fire is an increase in expenses or losses for the business, so it should be debited. Purchase is an expense, it is decreasing right now, so it should be credited. Input CGST and SGST is decreasing an asset, so it should be credited. And the journal entry will be loss by fire account will be debited with 15,000 to purchase account. To input 6% of the 15,000 is 900, and SGST 6% of the 15,900. Total loss by fire is, the value of the loss by fire is 16,800. Being goods destroyed by fire will be the narration. And the last one is payment made of balance amount of GST. Now balance amount, again, first of all we see what is the total input CGST, that is 9,000 at the time of purchase, then purchase return 600, we will deduct it, then again 300 added at the time of might be we have paid some expenses. Then drawings, at the time of drawings 1,200 input was deducted, credited, and again 900 at the time of loss. So total net amount of input CGST is 6,600. Total output CGST is 15,000 at the time of sale, then sales return 480, total 14,520 net amount we are having a total output of CGST. So net CGST will be paid out. So output we have 14,000, output we have 14,520, and input is 6,600. So output minus input, that is 7,900, is a balance of output CGST, which we are going to deposit to the government. Same way, this is because CGST and SGST are having the same amount, same percentage. So the same calculation I have shown for the SGST. So total amount we have to deposit into the to the we are going to make payment to the government is 15,840, that is 7920 plus 7920. So the journal entry for this combined journal entry is output CGST 14,520. Output CGST, it is having a credit balance. For canceling it, for making payment, we will debit it. Output SGST will be debited with 14,520, and input we are setting off. So they are showing debit balance right now. We are crediting for setting off 6,600 for SGST, and the balance amount has been paid. So bank is involved. Bank, as an asset, it is decreasing, so it should be credited with 15,840. So this is the last one. So that's all for the day today. We have discussed two questions, and i I have given one practical number 1 and practical number 2. You will solve at home, right? Thank you, children. I hope you would be solving all the questions and revising all the concept. Have a nice day.